Okay, good day, good morning, good afternoon. Okay, I welcome you back to yet another lesson, Form 3, and we are in Form 4 already. So today I want us to look at cash book. We have been looking at the accounts, and today I want us to learn on how to prepare a 2-column cash book and 3-column cash book. But because of time, we are going to start with the 2-column cash book, then later we are going to look at 3-column cash book. Why are we concentrating this? You understand that in paper 2 business studies, cash book is one of the major or one of the questions that always in the paper. It's very hard for it to miss in KCSE. So I welcome you back. So I just want to introduce, or I want us to understand more before we start preparing. Of course, that's the main objective of our lesson today. But then you are also supposed to understand the purpose of preparing a cash book. Remember last time when we were talking about the ledgers, we said that there's a certain type of ledger which is a private ledger that cannot be shared by any other employees. That it's always an account that is always being kept by the owner of the business or the topmost manager, the people who knows the secret. Understand? So I want us to look at this, and later we are going to look at the purpose. Then after that we are going to look at the reasons or the purpose of preparing it. Then later we'll look on how to prepare it. So cash book is just a ledger that contains cash transaction, and it will be cash or bank. A book whereby the transaction involving cash or check has been recorded. That's what cash book is. So it's not only receiving cash, but even using the cash or payment. And we always have two sides in the cash book. We have DR and we have CR. DR is all the debits side. It's the debit side. All the transactions that have increased the amount in the business or increased the account in the business are recorded in the debit side. Then all those money that were taken outside or money that were paid to the outsiders by the business, they are all recorded in the credit side. So that's one thing we ought to understand. So payments that are made by the business to the outsiders, all of those transactions are recorded in the credit side. And I understand, and I know that you can remember the ledger when we talked about, for example, just a recap, a ledger, we're having CR, DR. All those money that are increasing the accounts of the business or increasing the properties in the business. Let's say bought furniture. That furniture is being brought into the business. That is always being recorded in the DR. Let's say that maybe talking about the cash, took 10,000 to purchase, 10,000 to purchase maybe furniture. So in the furniture account, we will have an increment in the account of the furniture. But in the cash that was used to buy the furniture, DR, CR. In the cash that was used, which is 10,000, which was used to buy the furniture, we will record it in the CR, meaning that that cash has been paid out, so CR. But now, in the cash book, it's very simple. All of those transactions that we always open in each and every ledger account, all of them are just going to be recorded in one account. And I just want you to understand that in the cash book, we are only looking at the transaction that involve payment or cash being received. It will be cash, maybe cash in hand or cash at bank. Then in the 3-column cash book or the triple-column cash book, that's where now we are going to add another money column which involve the discounts that were involved, discount allowed or discount received. So after understanding or knowing what cash book is, we have just said that it's a ledger account that contain cash and bank accounts. See that? Then what are the reasons? What are the reasons? The reasons for preparing. Why do business have to prepare? This one could be a question in paper 1. They can ask you, and it's always required maybe like 4 marks. Why do we have to record, or why do we have to prepare cash book? So one is to reduce the bulkiness of the general ledger, and up to where we are, I hope you understand what ledger is. So it reduces the bulkiness. When I say bulkiness, there's always a lot of informations that are always there when you are opening Ledger's account. Imagine all of the Ledger's accounts being prepared. So after all of this being prepared, it makes it easy for the final transactions that are from the ledger are being taken to the cash book. So it reduces all the information that might have been placed in the cash book. All the transactions that could have been placed in the cash book are always summarized. Cash book is just an account that summarizes. So it reduces all those bulkiness that are from the general ledger, since most of the transactions take place in the business, involve cash and bank. So there are some that involve credit. All those that are not being taken to the cash book. You understand? The information that are being taken to the cash book, they are only transactions that involve cash in hand or cash at bank. Some that are involving credits, those are always left there in the ledger. So cash book summarizes. It reduces that bulkiness, especially of transaction. Then the next, cash and also bank accounts are more sensitive. You understand? When you're talking about cash book, why do you prepare it? Cash and bank accounts are more sensitive as they record liquid cash and hence have to be monitored separately. So being that cash is something that is sensitive, must be left on the hand of trustworthy or people. So it is something that really requires sensitivity and accountability. So cash book and bank accounts are more sensitive as they record a liquid cash and hence have to be monitored. So that's another purpose for preparing a cash book. Then the third purpose for preparing cash book by the business or by the business transaction or by the company is that cash and bank accounts are recorded on the same page in the cash book and therefore make tracing of what records easier. So when you prepare a cash book, you can trace the records easier. Records that are maybe from the source documents, you can trace them easier because cash book just acts as a summary of all the transactions that took place, especially involving cash in hand and cash at bank. This is an example, though this is a triple. This is an example, though this one is a triple column cash book or 3 column cash book. You can say triple or 3 column cash book. So I just want us to we have talked about what cash book is, then types or purpose, purpose, then after that types. Type of cash book. Types of cash books, there are very many, but according to our scope or our level, there are some that we only ought to learn, but some nowadays are not there in the syllabus. So we always have single column cash book. The first one is single. Then you have 2 column cash book. Then you have 3 column cash book. Then we have an addition, which is petty cash book or cash analysis, petty cash book or cash analysis. But then in our level, according to our level, we are not going to talk about petty cash book or cash analysis. But when you're asked maybe to give examples or types of cash book that you have, paper 1 always requires maybe 4. If they ask you 4, if they ask 3, that's well, you can write the 3. If they ask 4, you can add petty cash book and also cash analysis or analysis cash book. But because of examination, we are going to concentrate on the 2-column cash book and 2-column cash book and the 3-column cash book. Single column cash book, I want you to remember or recall back when we are preparing cash account in the ledger account. That cash account in the ledger account, that is a single column cash book. When you say single column cash book, this is whereby we separate all the money that were received or were used in form of cash on this in one account or cash book or ledger account, and all the money that were used in form of check being received or being paid outside the business in one account. So it's just like it's a form of a ledger account that only deals with money in hand or money at bank. You can remember when we were talking about ledger, we said that we had cash account, here CR, DR. All money that were received by the business involving cash were recorded here. Then all the money that were used are recorded here. So this is a ledger, but it also acts as a cash book. You can see that. Then bank account, CR, DR. This one now involves money that were received in form of cash and money that were used or money that were paid by the business to the outsiders in form of check. So all those money are being recorded here. So this is a single. When they ask you to prepare a cash book, what you only have to do, one, you draw bank account, another one you draw cash account. Or this one you can also say cash in hand account. This one you can say cash at bank account, and you record the transaction. That's the single column cash book. We have done it repeatedly and repeatedly in ledger account. Forget about the credit. When they're asking you to prepare cash book, forget about all the credit transaction. I know in the normal business transaction or in the equation, they will involve some of the transactions that are involving credits. Ignore such transactions because they are just meant there to make you maybe forgets. So cash book are only involving the transaction where cash payment, it could be cash in hand or cash at bank, took place. That's only what you record in the cash book. And the name itself suggests what it ought to be. It's a cash book, not a credit. Ignore credits, all credit transactions. So without wasting my time, this is an example in a real life situation, in a real business world. Cash book is something looking like this. Though this one is a triple column cash book, we'll talk about later. You can see it is triple. It's known as 3 because you can see 3 money column. There are 3 money column. That's why we call it triple column cash book or 3 column cash book. We have bank. You can see cash at bank, cash that was received through check or from bank are being recorded in this column. Then cash in hand are recorded in this column. Then discount allowed are also recorded in this column. So you can see in each side, this is DR, this is CR, this is debit side. Debit side, credit side. All payments, all receipts are here. So we call it 3 column cash book because it has what? 3 money column. Then continuing into the purpose, before we talked about that, we are talking about the purpose. Yes. So the basic types of a cash book are single column cash book. I think we have talked about that. That's it. So I want us to, without wasting time, I want us to go through how to prepare or do an example of a 2-column cash book. So let's do one of the questions on how to prepare a 2-column cash book. These are always there in the exam. Always attempt not to leave a question that is dealing with the cash book. It's very simple. Let's do this. So let's look at that. Hope you should be reading it and trying in your book. But then I'm going to also send you an assignment on a cash book so that you try. I'm going to send that in the WhatsApp group, and it will be in form of a Google form. So ensure that you do that and you submit so that I'm able to mark and check how you've done it. So let's look at the question. Back to the question. Undiko trader had 100,000 cash in hand. You can see that. Then and also 243 cash at bank. So cash at bank, these are like capital, the money you started with. Cash at bank, or the balance at bank, was 243,000. Then cash in hand was 100,000. Then that one was on the month of March 2008. You can see that. So the following transaction. So this is just the amount they started with. When you are starting to record a cash book, you start by writing this as a balance. So this indicates that these are the money that the business was having at the first date. So you record this one, and the details you write balance. We are going to do that. Then after that, there are some transactions that follow. And you know, transaction in the business, it always takes place. It always takes place based on several days or weeks, and etc. So we can, then after that, third there was also a transaction. You can see that, paid a rent, and they used 5,000 cash. So that's affecting cash. Then another one, March 11th, cash sales, meaning that there are some goods or stock of goods that he sold and it was paid in cash. So that's supposed to be increasing the cash in the account. So let's just record this one without wasting time. So first you start with the title. We say Ondiko. Say Ondiko Traders. And 2-column cash book. Two-column cash book, or something like this. Then this one must be double line. Then here is CR, there's DR. So the first, here I write date. Then here is details. Then here is ledger folio. Then here I write bank. So cash at bank. Then cash in hand. Then the same thing you repeat here. Date. Sometimes you may say details, may be also particulars, still okay in the accounting terms. Details. Then you have ledger, folio. Then you have bank. So cash at bank. Then cash in hand. So this is the format of a 2-column cash book. You can see that. That's the format of a 2-column cash book. So we say it is 2-column cash book because it has 2 money columns. You can see cash at bank and cash in hand in both sides. In the CR or credit side and also in the debit side. This means payments. Payment, then this one is receipts. All that were received by the business are increasing the business. They are being placed in this side. When we are talking about let's say that we're talking about in terms of assets. These are the properties belonging to the business. They are on the DR side. Then CR side, that is payment to the outsiders. So let's not waste time. So this person started a business, and the balance was, he was having a balance of 100,000 in hand, and also 243,000 at bank. So we are going to say first the date there was March 2008. We say balance. Those are the balance money that when he was starting a business he had them. So we record that in the DR side. We record that in the DR side. So ledger folio, you don't record anything there, just leave it. Then ledger folio you don't record there, then you just leave it there. Then at the bank it was 243,000. Then cash was 100,000. So that one you have recorded, this one, the first one. See how it's very simple. You have recorded the capital you started a business with. This one have been recorded. Then the second one, you go to 3rd March. So after writing the month and also the year, there's no need for repeating it again and again. You can just write, say 3rd. Let's read it first. Paid rent. Paid rent. So this one was paid. So if it was paid, then that one means that it was reducing the business. It must be payment from the payment side. So this one we will bring it this side and say that March, 3rd March 2008. Details, you write the reason, rent. Amount was 5,000 and it was in cash. So you write in the cash column 5,000. See how that's simple. Then the second one, or the following question, 11th March, cash sales of 14,000. Cash sales means that cash sales, in the sales we always talk about the stock. Stock are always being increased in the business by purchase. When you purchase stock, you increase the stock in the business. When you sell stock, then you reduce the stocks in the business. And that is in ledger terms. So when there was cash sales, that means that cash was received. There was receipts or cash being received in the business. So we are going to record that one here. Because here we have written everything, month and the year. So just write 11th, which indicates the same month, the year we're talking about here. Then in the details, you say cash sales. Cash sales. So cash sales, it was 14,000. 14,000. Yes. Then the next question, 14th March, purchased. 14th March, purchased equipment worth 37,000, paying by check. That one affect the bank. He purchased what? 14,000 equipment worth. So if he purchased, that means that he used money, cash book. He removed some cash to go and pay equipment. So please, this is not, here we are not talking about, we are not dealing with the ledgers. Here we are not even opening the equipment account. Here we are just going to look at how cash was affected, be it cash in hand or cash at bank in the business. How was it affected? Was it affected by being reduced, or was it affected by being increased or being added? So if there was some money used to purchase equipment, then that means that cash was reduced. So that makes us take it to the credit side. So we are going to say 14th, same date, which was the same month, which was March. Then you say equipment. In the detail you say equipment. Equipment amount was 37,000, but it was check. So we are going to write that, record that in the bank column. So all the transactions using check that are being recorded in the bank column. or cash at bank column. Then the next deposited what? 30,000 into bank from cash till. Deposited 30,000 into bank from cash till. This one is what is known as contra entry. There is something known as contra entry. Contra entry is an account that affects both sides at the same time. If money was taken from the cash account and deposited in the bank account, that means that that transaction affects both sides. It affects this credit side and also affects the debit side. Cash 10,000, for example, were taken with the bank, were deposited in the bank. So cash is being reduced in the credit side, but the bank is being increased in the debit side. So that one is known as contra entries, and we always record that. We always indicate it by writing C. So let's do it so that you understand whatever you're saying. So two cash deposited 30,000 into the bank account, deposited. So it was 20th March. So this 30,000, it was from cash. So you say cash is from cash and it went to bank. So it was 30,000. 30,000. Then you come also in the same dates. It was 20th March, and this 30,000 was taken to bank. So in the cash it was reduced. In the cash it was reduced. That's why we are recording the CR. In the bank it was increased. That's why we are recording in the DR. So in the details we are going to write that 30,000 went to bank. So we write 30,000 to show that cash is reduced. So we indicate something like this C in the ledger folio to show that this is a contra entry. Please don't fail, because it's always being noticed, don't fail to indicate a contra entry account that affects both sides at the same time. Then, without wasting much time, the next is that the next was on 31st. Took cash 10,000 for personal use. Took cash 10,000 for personal use. So when the owner, that's your Indico, took cash 10,000 for personal use, that means that it's only going to reduce money at the cash, or money in hand, or cash in hand, and that is known as withdrawal. So we are going to say 31st or withdrawal for personal use, and it was 10,000 cash. So then prepare. The question was to prepare what? Prepare Ondico traders 2-column cash book. And that's what we are doing. So I just want us to balance this. This is what it is. This is very simple. I'm going to give you another question and you try. There is something that I feel like I'll let you know also, based on especially when we are through with preparing and we are yet to balance the figures, both in the bank, in the cash, and also in the bank. So right now let's balance it off. We are going to start with the bank. Bank, this is 243,000 plus 30, that is 273. So we're going to say 273, a balancing figure, 273. Then double line. Then we come also to the bank here. Here we have 37,000. So 37,000, if you compare with this, they are not the same. So what are we going to do? We are going to introduce what is known as the same date, 31st, which is the last date. Balance carried down. Balance carried down is just a figure that is being obtained when you take the smallest from the CR and you subtract it from the total from the DR. Like if you take 37,000, you subtract it from this balancing figure in the DR, what you're going to get is known as balance carried down. Down. So balance carried down is the amount that is remaining for it to balance with the DR side. So that's going to be, you can do that without wasting my time. So we are going to take 273,000, subtract 37,000. It's going to be 269,300. So we are going to write this one here, 269,300. So if you had 269,300 plus this one, we will have the same figure, which is 2. So that means that we have balanced that. But this is balance carried down, amount remaining for it to balance with this. But also we bring it down here to show that that's the balance remaining. It's like a balance carried down. So let's say that if the business is being closed today, we say that we have this money in the account. So you say here also we put 31st, which is the last date. Then the details we say balance brought down, BD, brought down. So if the business is closing today, we will have this amount here, 2,9,300 as amount we are closing the business with. So here it is the balance carried down to show amount remaining for it to balance with this one. These are the money in the business. These are the money being taken away. So 37 subtract what the business have. The balance brought down is this one. I hope you understand it. Then this one, we go to the cash. We had this one plus this. This is literally 114,000. We also put a double line. Then we come here. If you had this plus this, that's 5,000 plus 30, that is 35, plus this one is 40, 45, 35, 45. So 45, if you compare with this, 45, if you compare with that, 45 is less as compared to this. So we are going to do the same. BD, we have written it here. Also, we are going to find BD in the cash side. So we are going to take this one plus this, subtract this one to get the CD, or balance carried down, which later we will also bring it as a balance brought down, a figure or money in cash that the business was ending with, or the business had when it was being liquidified or it was being winded up. So we are going to take that 14,000 so subtract 45,000. So that's 69. It says 69. 69,000. So 69, if you had this, which is 45 plus 69, you're going to have 114,000. Then same 69, we are going to bring it here as a balance brought down. The money that they were having in the business when it was winding up, so it's going to be 69,000. So we are through with that. That's the 2-column cash book. That's the 2-column cash book. So this is it, and I know we'll do more and more and more, especially when you have time for revision and revision. I'm going to give you an assignment. You do that, and please ensure that you also you submit after doing that. Otherwise, thank you and have a nice time.